All right.
Oh. All right, let's do it. Let's do it. Let's do it. Welcome to another episode of the Casket Ready podcast. I am one of your co-hosts for the evening. I am Mr. Life. And go ahead and introduce yourself, Ra.
Real Estate Raw. How's everybody doing tonight? Thank everybody that's tuning in. Definitely comment and like. We want to hear what you think about what we're talking about tonight.
Absolutely. Happy Monday. It's going down. Today's topic is life insurance brought my house. But before we even get into that, for those of you who don't know, it is Life Insurance Awareness Month. So, all month long, we're going to be talking about life insurance. Matter of fact, for the rest of the year, we're going to be talking about life insurance. Matter of fact, for the next 10 to 20 years, we're going to be talking about some good old life insurance until every single house is covered. Every family is protected. It's going down. So we're not going to waste no more time. We're going to get right into it. So life insurance bought my house. I mean, how is that even possible, Rod? Talk to the people. Let them know, how is that even a real thing? How does that even work?
I mean, one, if your parents died, and left you that $300,000-400,000 pay off your house, that's one way. You know what I mean? Getting a policy too is another way, using that as a down payment and investing. But before we even get into that, we might as well play the video to give everybody an idea of how that all works, and we'll talk about it.
Money into my life insurance. I've been doing this now for a decade. So what I did was let's talk about the house that I bought. I've been able to build up money into my life insurance. I've been doing this now for a decade. So what I did was I got a no doc loan at the time. It was $100,000, and I was upset because at the time the interest was 5.5%. I was like, man, this is high interest, like 3.5% at that time. Right. Now looking at it, I was like, I did a good thing, right? I didn't even realize it. So anyway, got the $100,000. I borrowed against my policy. Then I paid the down payment for the house.
You can do that?
Yeah, you can borrow. Just paying money. But then as I'm making money from it, I actually paid back off the loan that I had in about 5 months. And my life insurance policy was still growing as if I never touched it. So I was still growing interest on $100,000 as if I never touched it, even though I used it to buy the house. Let's talk about the house that I bought.
Yeah, perfect. So he touched on a few key things. He said he got a life insurance policy, and then he used it as borrowed from it and used the down payment to get a house. And the policy was only $100,000. That's crazy, first off, where everybody always think a life insurance policy, somebody got to die to benefit. Nope, not the new day age life insurance. You could do everything from it to the point where, like he said, you can borrow from it, meaning you can get a policy. He had it probably for like 4 or 5 years, and he was able to pull out $10,000-15,000 to put down on a house, which is insane. And a lot of people don't know about that. And it's legit, traceable money. The bank don't have a problem with it. And I know you as the customer is not going to have a problem with it because you get to borrow from it, and it's tax-free money that you're borrowing.
And then also when you look at it from the perspective, right? When you purchase a home, you're getting a loan from the bank, right? So then you got to look at it from the perspective of you're actually getting a loan from yourself with the life insurance. And here's the thing, there's no approval process. It's your money. So based off of how much cash value is in the policy, that's how much you could borrow from. So that's why he was able to put a down payment on it, because whatever that amount was, he can use that cash value towards the down payment of the home. Now, and the reason why this is even possible is because when you're paying into your policy every single month, a portion of it is going towards the cash and a portion of it is going towards the death benefit. And that's how you're able to accumulate cash value throughout the course of time, through compound interest. That's why he's talking about 3 to 4 to 5% interest that he's getting on the money, right? So keep that in mind. That's how that works. That's how he was able to put that down payment on. It's a real thing.
Yeah, no. So to your point, it's crazy because it's just like a 401k. I like to compare it to people where you get a life insurance policy, it builds cash on it, and then you can borrow from it just like a 401k, and there's no tax penalty. So if you're under 59 years old, that's the best way. Works just like a 401k, and you could borrow it. So imagine getting a policy, like he said, for $100,000, probably only paying like $70, $80 a month max. And 4 or 5 years from now, he's able to borrow $10,000, $15,000. And that's a house price for like around $350,000. You don't have to worry about, coming up with a down payment because you borrowed it from your house. That's the amazing thing. And on top of that, you could borrow the money for other things, whether it's buying furniture for that new house. You know what I mean? All kinds of stuff that you need to do when you're buying a house, which you can't beat that deal at all.
And so then it becomes, that's just one funnel to where, because think about it, like when you purchasing a home, you're naturally saving up to buy that home, right? So then this is on top of what you're already saving. So you're saving on your own, and then you're saving with the life insurance policy, right? And then one thing I want to highlight too is that he also said when he borrowed against that money, the policy in the cash in the policy was still growing as if it wasn't even touched. And that's what people don't realize. When you have a life insurance policy, your cash value pretty much is collateralized. So you have your cash, you have your death benefit, you have your surrender value. So your surrender value pretty much is what you're using. Death benefit never gets touched. So if that money that's in that account, it's still being collateralized as if it was never touched. It's literally just collateral. So that's the reason why he can pull from it and still have that same amount of money still sitting there as if it never was touched at all. So that's important. A lot of people don't realize that's literally how it works.
And I love the fact that you actually said that, though, because that's a key point. He was like, yo, my money kept growing after I put the down payment. So not only did you get to use it for life insurance, but his money kept growing, and he was able to borrow from it at a later date and use it. That's insane. You know what I mean? Again, no tax penalties because you're borrowing from the money like a loan. So you're not paying any tax, and you're only paying yourself back with interest. A lot of times we say it's too good to be true. Nah, this one is actually true. It's a catch. There's always a cap with the interest rate and all that type of stuff. But you still can't beat it because these policies normally perform on average 6 to 7% interest rate. On the low side, 3%. On the high side, up to 17% with interest. So you're making money and borrowing from it and using it to get ahead. And that's how a lot of rich people get rich, to be honest with you. Actually, it's a real fact. 30% of billionaires and millionaires' money come from life insurance.
Mm-hmm. And keep in mind that it's a loan, right? So you don't necessarily so at some point you would want to pay it back. Now the good thing is this: let's say for whatever reason you had tough times or hard times paying the loan back. Let's just say that you borrowed about $15,000. You had $100,000 worth of coverage. You borrowed about $20,000 from your policy. Worst case scenario, if you don't pay the loan back, it just gets subtracted from your death benefit. That's it. Your beneficiary just walks away with $20,000 less. They can still bury you. Keep in mind, it's still life insurance. They can still bury you. It has that death benefit attached to it. The policy still has living benefits attached to it. And he was able to purchase that home. You get what I'm saying? So it's a win-win situation all around, all across the board. I mean, I guess my question for you, Ra, is that why do you think that people are so afraid to, purchase a home? Like, what's the biggest fear?
The money. I mean, well, first off, it's the credit and the money. What else? It's either I don't have perfect credit and I don't have the money. In a lot of cases, a lot of people don't have both. Where you have somebody where the myth is I got to have a 700 credit score, I got to have a 750, I got to have an 800 to buy a house. False. A lot of people think these days, oh my God, I got to have 40, 50 grand to buy a house. False. So it's always the money and the credit. And where the life insurance come in is that you can use that as a down payment. There's other stuff out there because, we're into credit as well on top of real estate. And so there's down payment programs. But either way, you can borrow from this policy and help with the closing costs. So for a house that costs $300,000 overall, it's about, $25,000 or so that you'd have to come out of pocket to buy the house. With that said, with this life insurance policy, you can borrow, depending on the policy you have, $10,000 to $20,000 of that money and take advantage of a down payment program So you could be in a situation where you spending zero out of pocket, literally, to buy a house.
Question on IG: do you have to wait with a term life insurance? What do you mean? Do you have to wait? What are we waiting for? I don't get it. What are we waiting on? Now, if I could guess, what you're trying to say is, can you use a term life insurance to purchase a home? Now, with the term life insurance, it's a little different. You can use a term to, it says to your money, to your money. Let's get it. What are we doing here? What's going on here?
Let's connect the English pieces together.
Yeah.
The English pieces together.
So can you use your money for to purchase a home with the term policy? I'm assuming that's what we're trying to say, right? So with the term policy, it doesn't have any cash value. So you can't necessarily use the term policy in regards to helping you purchase the home. However, you can use the term policy to help protect the home, because the value of the home, right? Let's just say if the home is worth $500,000, you get yourself $1 million term. So the ideal thing is you want to get both. You get the permanent policy to borrow from so you can purchase the home, and you get the term policy to protect that home. Once again, if you have that $1 million policy and your home is worth $500,000, God forbid anything happens, you pay off that home with that term policy. Well, your beneficiary is going to pay off that home with that term policy, and you still have that. The beneficiary still has that permanent policy. Obviously, all that's going to get cashed out once you pass away, but they're used for different reasons. So they're both beneficial, term and perm, for the home in order to complete that home.
Yeah, and like I said, ultimately, at the end of the day, to your point, Kay, that term policy can protect the house. So you can get a term policy for dirt cheap at the end of the day, and if something were to happen to you, the house is paid off. So in that case, $1 million coverage policy might actually only cost maybe $40, $50 a month, depending on your age and other factors. And God forbid something does happen to you, goes into our segue conversation where now that house is paid off and you walk away with $500,000. So the money you left for your son, now you just left for your kids or your one child a legacy, hence legacy builders. You know what I mean? So that's the whole point of the term. That's how you can use it to your advantage.
And then lastly, I always like to highlight this too, when we get the home, anything can happen. We can still get sick. So not only can you borrow against the loan and purchase this home, not only can you protect this home, but if you were to get sick in that home, now your policy is still coming with living benefits, and that's what, I do want to always highlight that, because that's super, super important when it comes to having these policies. These are one of the features to having a policy, is that you can use these policies while you're alive. Once again, to borrow against the loan, to use it for its living benefits, and for death benefit protection. So there's so many different features of having this policy. But the whole purpose is going hand in hand with having, a home, is to get this life insurance, because it complements it.
Yeah, no, to your point, it's crazy because the two benefits from both sides is that with the term and the whole life policy or permanent policy, if something were to happen to you, you get critically ill, you lose a limb, you have access from 25 to 75% of that money. So that's the great benefit on both sides. To where, to your point, Kay, if you get sick, something drastic happens, a life-changing event happens in your life, you have a $300,000 policy, you potentially have access to $225,000 of that money to go on living. Whether you caught cancer, whether you lost a limb, a drastic change happened in your life, and you can use that money to continue living and paying your bills and actually enjoy life in difficult times, which is huge. That's a big thing. A lot of people don't realize the benefits of life insurance. You don't have to die to get the benefits. You can actually get a bunch of benefits living.
And then also, so, a lot of people say, it's too expensive. I can't afford the insurance. It gets more expensive the older you get, right? So, and there's this thing called an insurance age. So however old you are, it pretty much calculates you in 6 months into your next age, right? So, and people don't realize that. So for me, I'm 39. My insurance age is 40 years old. So then the cost of insurance is going to go up. So then you waiting doesn't help the process. It actually hurts the process because you should be doing it like yesterday. Why? Because it's just going to get more and more expensive, and that's the main thing when it comes to this life insurance. We want to make sure that we get it as soon as possible because one, we want to protect our family, and two, we want to make sure that it's affordable for us. And the older we get, the harder it is to pay it off.
Yeah, and to your point, I guess the question I asked for you, Kay, for the masses. So let's get this straight. So if you get a term and something happened to you, your house is paid off. If you get a term policy, it also comes with benefits. If something happens in your life, whether you lose a limb or a drastic change in your health conditions, you can borrow up to 75% of your money. And if you get a permanent policy, you can borrow cash from it to help buy a house with down payment. And that same exact policy, it builds cash that if you come on hard times, you can borrow from it just like a 401k, but no penalties and no tax. And you said it's worth, it only costs about $50 to $75 a month, depending on how much coverage you want. And why can't people afford this? You got the answer for me? Somebody got the answer for me?
They could afford it. they could afford it. All they got to do is call that number at the bottom of the screen or go to the site. And it's just simple as having a conversation with us. Let us know. I don't believe in people not being able to afford insurance. It's all about priorities. Well, what are we prioritizing? It's super affordable. 100% it is. So at the end of the day, I tell people that, we got to value our life, a lot more. That's all it is. We got to put ourselves first. When you go on an airplane, you know what they say? They say, protect yourself first, right? They say, cover your mask first, and then, worry about everybody else. Protect your life, protect your family's life. It's super important. Trust me when I tell you, you're going to thank us later for it when those times do come. Because the funny thing is that it's not whether if it's going to happen. It's just a question of when. I always say that. It's not if, but when. So protect your family, protect your life. And, it's important.
Yeah, plus, at the end of the day, like you said, you just never know what's going to happen at the end of the day. You can't predict that at the end of the day. And we all know, like, think about it. To your point, Kay, we get in car accidents on, throughout our lifetime. You know what I mean? We getting old now. That one little, you ever see the videos where you're trying to jump off a little step, an old person over 40, and you see the ambulance coming? That's a situation where a policy like this will come handy. You know what I mean? Like, and it's riders, what's called riders, where we can add those additional, income riders in there where if something happened and you lose your income, you can protect your income on top of that. So literally, if you lose your job, certain situations where your income is affected, there's a rider or an add-on to the policy. We can be like, hey, for extra $7, $8 a month, we can add this on. So if you lose your job, you get 60, 70% of your income on top of employment. So it's as if nothing happened, and you get to be at home on vacation, getting paid your full check and a little bit more. And if you're in an at-fault accident, if you're not at fault accident, and you get a big settlement at the end, so the triple win.
And it's crazy because a lot of times people, when they purchase a home, they'll get mortgage protection, which is good. I think that mortgage protection is great. You're still supposed to cover all the things that's inside of the home, right? But you still want to get the life insurance too, because you want to protect the life and the home itself, right? And because people, a lot of times, they'll get the mortgage protection because they understand like it's almost a necessity when purchasing a home, right? But they're not getting the actual life insurance, right? So then that's two different things that people don't realize that's out there. But the answer is you get both. You get both. If you ate today, you can afford a life insurance policy. If you went on Amazon today, you can afford a life insurance policy. Like I said, I don't believe in someone that can't afford it. It's just a question of if you value it and you take your life seriously. If you take your life seriously, you go ahead and get that policy.
And to add on it, not only about taking your life serious, it's also about taking anybody around you serious at the end of the day. Because let's be honest, though, like we all have older family members where something drastic happened and can't afford their bills. We all have situations where we have uncles, mothers, fathers, where they pass away and we're doing a Go Me fund. We all have those scenarios. We always have those random scenarios where a random person just died and caught a heart attack or a stroke. All those situations, you're protected. And even in a situation where someone catches a stroke, if that person had a policy, they're good to go. They can borrow from that money. It's a life-changing event. So, and to your point, affordability, it's insane. Of course it's affordable. $25, $50 a month. You going to McDonald's one run is $38. Let's be honest here though. Like, you know what I mean? Everybody spends at least $30 to $40 in one setting somewhere throughout the course of the day. Whether you a smoker cigarettes, whether you smoke the green stuff. You telling me you can't afford $30, but you can get an O? I'm just saying. I mean, let's just be honest here though. Let's be honest here.
My man said the green stuff though. Oh man. And I know for a fact that you're not doing no GoFundMe's because you can't even say it right. You said go me funds.
I say get that backwards. GoFundMe's.
It's okay. I know that. I know because that happens. You're not using that. That's good. That's good. That's it.
We can't be out here selling shoes barefoot. We can't be out here selling shoes barefoot at the end of the day. You know what I mean?
Exactly. It's a little early, but I know we're coming to a close soon. Any events we got going on? Anything special we got going on coming up?
Yeah, so we got the event coming September 27th in Greenbrook, New Jersey. Just go ahead and book your tickets. You know, go to the website, which you see scrolling at the bottom of the screen, legacybuildersus.com, and then all you got to do is go to the events tab and get your ticket. It's going to be a virtual event too as well. All you have to do is just put in the notes virtual. So therefore, just go ahead and get it. Vision and Vibes. That's what it's called. September 27th from 10 a.m. to 2 p.m. So go get your tickets. It's going to be food. It's going to be drinks. And for the people coming on virtually, you get other incentives. We give you discounts with credit. A personal coaching experience, everything like that. So you can't miss it. It's everything about getting money. So anybody that's honestly struggling at all, living paycheck to paycheck, definitely there's no reason to check it out. $30 will change your future. $30 will change your life at the end of the day. So definitely that's something that everybody should check out.
Absolutely. And then for next week, all my people listening, next week's episode, we're going to be talking about, smokers versus non-smokers, rolling up on the approval. That's the name of the topic for next week, rolling up on the approval. So for all our smokers out there, we're not counting you out. You can still get a policy too, just keep that in mind. But that's going to be a great conversation next week. Without further ado, we're going to go ahead and wrap this thing up. Once again, my name is Mr. Life, my co-host, Real Estate Ra.
Mm-hmm. Mm-hmm. And again, definitely on the replay, definitely go ahead and comment, like, and don't miss next week's episode. Like Kay say, roll up and get a policy. You know what I mean? It's for the smokers. Smoke your way to the policy. Matter of fact, we might name it that. Smoke your way to a policy.
I like it.
Definitely. All right, everybody.
Yeah, have a good night.